Good morning, traders. Welcome to another segment of Technical Talk. My name's Aaron Hill, and time is now 8:56 a.m. GMT. So, unless you live under a rock, you will have undoubtedly seen the latest headlines regarding the unfortunate situation between Russia and the Ukraine. Look, the current headlines right now are high-level talks between Kiev and Moscow are set to take place on the Ukrainian-Belarus border. The Ukrainian president calls the next 24 hours crucial for the Ukraine. The unfortunate death toll now stands at 352 people, including 14 children. This is from Ukraine's health ministry. Also, in other news, not other news, but Moscow shifts its nuclear forces to high alert footing. Also, the Russian central bank raised its key interest rate to 20% from 9.5% today in an emergency move. And authorities, they're told export-focused companies to be ready to sell foreign currency as the ruble also tumbled to record lows. Also, certain Russian banks have been removed from SWIFT. So look, latest news just coming through right now. The Ukrainian presidential office also noted that their main priority for the talks is, as you would imagine, is an immediate ceasefire and retreat of Russian forces. Now, breaking news right now: Ukraine's delegation has arrived at the Ukraine-Belarus border for talks with Russia's delegation. With that, you are likely to have seen a volatile opening this morning when U.S. Sunday evening futures commenced. U.S. equity futures were absolutely slammed, and safe havens traded higher, including the yellow metal. So as you can see right now, U.S. equity index futures trade lower across the board. Dow Jones is down by 1.5%. The S&P 500 futures down by 1.9%. The Nasdaq futures, Nasdaq 100 futures, down 1.7%. Now, in terms of the European cash markets, look, this should be no surprise here, given the current escalation between Ukraine and Russia. Look, we are lower across the board here. The UK's FTSE 100 is down 1.6%. The DAX is down 2.5%. The France's CAC 40 is down 3%, and Euro Stoxx 50 is down 3.2%. Now, in terms of the Aussie dollar and New Zealand dollar, as you would expect, being risk-sensitive proxies, they are also lower across the board. Look, the Aussie dollar currently trades at 71.97, just below the 72 handle, and is down 0.5% right now. So, and it's a very similar picture across the New Zealand dollar currency pairs. As you can see, the New Zealand dollar currently trades at 67.07 and is down 0.4%. As you would expect, safe haven currencies are underpinned at the moment, with the US dollar currently up by that's the wrong. It's closed on that market. The US dollar index is currently higher, but is as I recently looked, is currently pulling back from session highs. Look, the euro dollar is down 0.8%. 0.8% right now. The pound dollar is down by 0.3%. The dollar CAD is up by 0.6%, and the dollar Swiss currently trades unchanged. Now, in terms of the crypto market, just bear with me. In terms of the crypto market, we are seeing a bearish tone at the moment. Bitcoin is down by 1.4%. Ethereum against the dollar is down just over 4%, and Litecoin is down by 2.4%. Now, if we switch over to the charts just really quickly. Now, look, FX saw a huge jump in the USD in early trading, as you can see here. We are currently up by 0.7%. We saw a huge jump in early Monday trade, and there also were gaps lower almost across the board for the majority of major currency pairs. As you can see, excuse me, as you can see on the euro, we did gap lower, and we are currently trading around the 11.75 region. Now, the gap lower is in line with the overall picture on the weekly time frame, higher time frames for the euro dollar. So this is the weekly time frame. This is the daily time frame. As you can see, we have recently retested a resistance at 1473, 1583 on the weekly time frame. Now, further downside, further weakness in this currency pair could lead us as far south as 0778, which is a Quasimodo support, and this is area, or this is the region of course, the pandemic lows of March 2020. Now, in terms of the daily time frame, following a rejection of the 14th of January high at 1483, look, prime support is now on the radar at 0941, 110. Sorry, 110. Yeah, 110. Sorry. So this is a prime support, and this is a support we should have noted, particularly if we do continue to push lower. Now, on the H4 time frame, we did recently complete an AB equals an alternate AB equals CD formation, a bullish formation off of the 1.272% Fibonacci projection at 1124. As you can see, the bounce, we did get a nice healthy bounce at the tail end of the week, which did test the 38.2%. Let me just pull that up so we can all see. Which did test the 38.2% derived from legs A to D, as you can see, and we did, and from there, leaving this prime resistance at 1322, 1276 unchallenged, we did gap lower and have retested the alternate AB equals CD limit. Now, should we push below here without filling this gap, do be aware we do have Quasimodo support, Quasimodo resistance, turn support at 1089 to be aware of. Now, on the H1 time frame, this is more shorter term flow. We do have the 112 figure in play right now. It was recently tested in recent hours. Look, should we break above this psychological number, then I do expect we will likely attempt to fill this gap and potentially test this decision point at 1295, 1275, with obviously the potential to whipsaw above here to test the round number, or even whipsaw above this round number to test trip the buy stops above this round number and test this Quasimodo support term resistance at 1320. Now, on to the Aussie dollar. Look, not much of a change on the weekly time frame right now. Prime support remains in play at 69, 68, 72, 42 on the weekly time frame. It's not really given us much since late November of 2021. But still remains in the picture, so it should not be overlooked. Look, as we head down to the daily time frame, we have had resistance form between. I've actually noted the resistance area between the 200-day simple moving average, currently trading at 73.30, and Quasimodo resistance at 72.78. As you can see, I've marked it with the red arrow, red area, and we have reacted from this zone. Should we continue lower, we could test this decision point at 69, 64, 70, 40. This to me is a relatively fragile zone, and should we break here, we are then looking at Quasimodo support at 69.01. Now, also of interest on the daily scale is, of course, the RSI, the relative strength index, which is currently engaging resistance at 58.43 and the 50 center line. Now, should we break out higher here, this could mean we are likely headed to retest this price resistance. Should we break below the 50 center line, which informs traders that average losses are exceeding average gains, and could forecast a potential move back to the decision point. Yes, so look, on to the shorter term flow of the Aussie dollar. The H4, we did bounce nicely from this Quasimodo support at 71.09. And look, if we do continue to push higher after filling this gap, we could be in range for an AB. Look, A, B, C, D, and AB equals CD to the upside, which is a bearish formation at this, which could terminate around the daily Quasimodo resistance at 72.78 mentioned a minute ago. Now on to the H1 time frame. The keynote in the latest weekly, market insight was obviously this area here, which is a combination of a trend line support term resistance taken from this area here, this low here, which is around the 70.86-ish zone, and a deep 78.6% Fibonacci retracement at 72.44. As you can see, I marked it in red. We did gap lower from here this morning. So look, if we do, and we are currently trading around the 72 figure. Now, if we do come above here, obviously above this psychological figure, I do believe we will fill this gap and potentially retest this area of resistance here. To the downside on the H1 scale, we have prime support. Now, this is a key area to be mindful of at 71.41, 71.55. If we do reject this psychological number, I do believe we are likely to head for this area. Now, just of particular note, we have formed a very small intraday AB equals CD. As you can see, the A point, B point, C point, D point. Now, this could add weight to a potential rejection from this area. Now, again, guys, do look for the 38 point, for the much shorter term traders, do look for the 38.2% and 61.8% Fibonacci retracements derived from legs A to D as potential take profit objectives. Now, moving over to the dollar yen. Look, we are forming an ascending triangle on the daily time frame here. And that kicked off around at the beginning of December of 2021. Now, as you can see, we are compressing within this zone that's made up of a Quasimodo resistance at 116.33 and an ascending triangle, which is taken from around the low of 112.53. Now, should we push higher from here? Should we break out to the upside? Look, ascending triangles are generally viewed as continuation signals, but they do break down. They can and do break down to the downside and form reversal signals. So do bear that in mind. Anyway, should we break out to the upside? This would likely lead to a close above the weekly time frames 1.272% Fibonacci projection at 116.09, and of course confirm the uptrend which has been in play. You know, we could say all the way back from pandemic lows of March 2020. We had a strong move up, a rather deep correction, and then followed through with a series of well-defined higher highs and higher lows. Now on to the H4 and H1 time frames. Look, between the on the H1 time frame, there's not really much to add, other than we are ranging between Quasimodo resistance at 115.75 and a Quasimodo resistance turn support at 115.17. Now, I did note in the recent weekly market analysis, should we pull lower below this Quasimodo 115.17 and look to test the 115 level, 115 psychological figure, do be prepared for a possible whipsaw below this round number into this support at 114.93. This is common. Around the psychological levels, a whipsaw above or a whipsaw below is very, very common, and should be almost expected to a point, especially if we have clear-cut support or clear-cut resistance above the psychological figure. In terms of the H4 time frame, now I won't go over this too much again because I believe I went over it in the last technical talk, but we have had an incredibly impressive AB equals CD. You could almost say an appreciation on the H4 time frame here. So we had an AB equals CD bearish formation to the upside, and which terminated, to the pip at daily Quasimodo resistance at 116.33. And what was brilliant about this is the reaction from this area also formed an AB equals CD bullish formation. And what was lovely about this is the termination point for the AB equals CD bullish formation is it terminated at the 61.8% Fibonacci retracement at 114.57, which was derived from legs A to D of the AB equals CD bearish pattern. But look, as you can see, we have reacted from this area, and quite rightly, we did complete the pattern by testing the second take profit objective at the 61.8% Fibonacci retracement of 115.64, which again was taken from legs A to D. Yeah, so that's really it on the dollar yen. Now, swiftly moving over to the pound against the dollar. Look, we are testing daily support at 33.55 right now. Should we break below this support level, then I am looking at this Quasimodo support at 31.19. Now, the important thing to bear in mind here is this Quasimodo support also ties in nicely with this double top profit objective on the weekly time frame around 30.90. So do bear this in mind. This is considerable resistance, despite this market being underwater for since we formed a double top in February of 2021. So we could be in for a nice move to the upside from this Quasimodo support region. Now, of note on the RSI, the relative strength index, we are firmly below the 50% region right now, and pretty much on the doorstep of the oversold threshold. So if we do enter into this level, do be aware that we could see a reaction to the upside. We could, I emphasize the word could here, because we are trending lower, and this could keep the RSI within oversold territory for long periods of time. Now on to the H4 and H1 time frames. Look, the H4 time frame came within a handful of pips of testing an AB equals CD bullish formation, as you can see, A, B, C, D, and reacted to the upside, and has tested and has respected a Quasimodo support turned resistance at 34.36. These are the two levels I'm really watching on the H4 right now, which coincides with, so look, the resistance on the H4 at 34.36 also coincides with a resistance area on the H1 time frame at 34.43, 34.59. As you can see on the H1 time frame, we are currently below the 134 figure due to this morning's gap. If we do push to the upside, we will likely fill the gap, fill the opening gap, and also potentially complete an AB equals CD, an intraday AB equals CD to the upside. Yeah, and potentially test this resistance area here, which, as I said, converges with the H4 resistance. Now, alternatively, do be aware we have a resistance area, a H1 resistance area lurking at 34.77, 35.14, which encloses the 135 handle. Now, in terms of gold this morning, look, we are still this is the daily time frame. I am still watching this symmetrical triangle unfold. We have broken considerably to the upside from here, but look, we have recently tested a resistance from 1974, 1959, and pulled back. Right now, we are strongly off best levels as of current trade, and I think this has to do with the latest news coming out regarding the Russia and Ukraine situation. But yeah, so look, I'm watching this resistance here at 1974, 1959, and obviously the top edge of the symmetrical triangle as a potential support should we retest this area. Just another note for any traders that use moving averages. We do have the 200-day simple moving average and the 50-day simple moving average attached to the chart. And as you can see, we have crossed above the 50-day SMA has crossed above the 200-day SMA, which many chartists refer to as a golden cross, which has a bullish indication attached to it, I guess you could say. Now, finally, we have Bitcoin and gold left. So Bitcoin, look, is coming off daily resistance at 39.72. Now, if we do hold below this resistance, I do expect these lows to be taken. The low at 32.933 and 34.322 to test these two Quasimodo supports between 3260, 32,117. So do be aware of these supports should this resistance hold. Finally, on oil, look, oil is up considerably this morning, as you would imagine. The WTI market is up by nearly 4.5%, but is off highs of $98.17 a barrel for WTI. But look, on the Brent side of things, Brent crude oil, we did touch a high. We have recently touched a high of 105.10, but have whipsawed back below the $100 a barrel threshold. So do bear this in mind. This is going to be an incredibly volatile market for the at least for the upcoming session. Sorry, I was just checking the latest news feed. Yeah, so do keep an eye on oil. Look, so that's a wrap from this side. Feel free to send in your comments regarding the presentation, or any suggestions to the market analyst at fpmarkets.com. That will go straight to the research team. Alternatively, feel free to send an email to the support desk at support@fpmarkets.com. Look, guys, thank you so much for sharing. Thank you so much for joining. Have a great week ahead, and we'll be back bright and early on Monday. Thanks so much, guys.